Hello, I'm Alistair MacLeod, and I'm here in Madrid on behalf of the GoldMoney Foundation. And with me is Chris Martinson. I'm very pleased to have you here, Chris.
Thank you.
Chris, you run the Crash Course. Can you tell us a little bit about the Crash Course?
Sure. The Crash Course was the final result of about 4 years of inquiry and exploration, where I started looking at the economy. Very self-interested, by the way. I was very worried about what was happening to my stock portfolio. I was working as a vice president of a relatively large corporation, became very unsatisfied with the answers I was getting from my broker. So I started looking at the economy. This is the first E in the Crash Course story. There are 3 E's. The first E, economy, I started peering at what was really going on with my country. Entitlement, debts, money creation, all of this was quite a wake-up call. And before too long, I'd managed to combine that with a second E, which is energy. And when I put those 2 pieces together, particularly the idea of peak oil and how our economy needs to grow, constantly grow, and oil is really the main lubricant of that growth. 95% of everything that goes from point A to point B uses oil. So when I put those 2 pieces together, I said, whoa, wait a minute. I have this economy that absolutely has to grow to function well. We have absolutely historic levels of debt that need to continue to grow to be serviced. And we have this really giant story around oil, which led me to other resources, which is the third E in this story, the environment. And once I had all 3 pieces together, I'd grown tired of telling this to small audiences, maybe 50, 100 people at a time. Put the whole thing into something called the Crash Course. It's online. It's a free video form, 20 separate chapters that I thought was going to be a complete disaster. You know, it's 3.5 hours. It's got graphs, and it exploded. We had 1.5 million views worldwide the first year, and it's been since translated into 6 languages now, 3 or 4 more on the way, all by volunteers. So it's a story about our current times that helps explain where we are, how we got here, and I hope a little illumination about where we're going.
That's very interesting. So this, you suddenly became aware that there were things happening which you couldn't understand or whatever. Was this before the financial crisis in 2007-8, or was it post that?
Yes, this all started for me in 2002. By 2004, I'd created a seminar. The live seminar was called The End of Money. And by 2007, I'd started the early work of putting this online. And I have articles stretching all back through that series that talk about the looming credit crisis that was coming, the housing bubble, the larger debt crisis that was going on, other things like that. And fortuitously, if you like timing, the Crash Course final Chapter 20 installment, first one went in March, the last one went in October of 2008, about a week before the markets really fell apart. So that helped drive some of our interest in traffic, I think, was a spot of timing.
I'm sure it did. And since then, I don't think it's been too difficult to predict the course of economies. And has it sort of more or less gone as you would have foreseen it through the Crash Course?
It has, with a couple of surprises. You know, first of all, the main macro story here is that I could summarize the entire crisis just in the economy, leaving the other 2 E's aside, in 3 words: too much debt.
Yes.
So with that summary and diagnosis, I had a very different one than, say, the central banks seem to be pursuing. They seem to believe that what we need is more credit. So we have very separate sort of diagnoses and different prognoses as a result. But the thing that really surprised me was, if you'd said 4 or 5 years ago, Chris, what we're going to find is that the United States is going to be running a fiscal deficit of 1.5 trillion. The Federal Reserve is going to have tripled its balance sheet. And as a consequence, the dollar is basically going to be exactly unchanged. I would have said, you're crazy. That's impossible. Right? But of course, this whole story was a global story, and it started falling apart at the seams all at once. And that was something I don't think I had appreciated as much. I'd really been focused on the U.S., and now we see, you know, which currency would you go to? Where would you hide? And it turns out, you know, maybe the dollar is the best horse in the glue factory at this point. You know, that was something I hadn't really foreseen at the time.
It may be one of the worst in the glue factory.
It might be. But jury's out.
But the problem is that we're all tied to the dollar, because, you know, we have a dollar standard effectively, and we're tied any currency that decides it wants to go it alone. It has all the exporters screaming away, you know, you can't do this to our business and so on. So it's still a race to the bottom, or do you see anything more hopeful than that?
Well, in 2003, I was advising everybody I could get my hands on to just start getting into gold and silver, but gold primarily. And the reason for that was I saw this dynamic. I appreciated this was going to happen. It was beggar thy neighbor in the 20s and 30s, and so now why wouldn't that return? Everybody wants a weaker currency. And so when I say the dollar's really gone nowhere, that's not true. In the past 5 years, it's lost 75% of its value to gold.
Exactly, and if you measure the price of oil, for example, and you refer to energy, you
Right.
measure that in terms of gold, it's just moved sideways from the year
Exactly.
2000.
Exactly. And so really what I've done is I've tried very hard to get people to stop thinking about the dollar price of gold, because people get all tripped up like, oh, it's in a bubble, wait, I should have bought a while ago, wait, now it's going down, I don't want to buy now, oh, now it's too high, and they have all this, it's just too hard. Instead, I say, listen, what we really care about, unless we want to be super clever and we're day traders and we're going to like beat the system, what we should care about is in 10 years, what's my purchasing power? And so I really care about how many ounces of gold does it take to buy a house? How many barrels of oil will an ounce of gold buy? How many ounces of gold does it take to buy a share of the Dow? And things like that. And you put all those on charts, every one of those trends is in gold's favor. There's a couple wiggles here and there, but these are all charts that you would buy right now if you were into things like charts and trying to analyze this technically. So I don't see anything at this point to get me off of my gold bandwagon, which I've been on for almost a decade now. And really, they're very big things that would have to reverse for me to change that course of action. We'd have to have positive real interest rates. We're very far from that. We would have to have zero fiscal deficits in the major economies. We're so far away from that. We would have to have balanced trade across the US dollar in particular, because you mentioned it is the reserve currency. We're light years away from having a balance of trade. So these are all very big, giant pieces, which to me are sort of the tailwinds that are going to continue to support gold. And then I love gold because it has an option value embedded in it, which is if somehow the world currency system does finally develop some sort of a serious rent, I think we'll go back to a gold standard, not because it's the best thing necessarily, but it's because the only thing that we have on the books that we know works. And
The market will select it.